So I thought, my husband had read Warren Buffett's book or his autobiography or whatnot, and it talked about, he had mentioned that it talked about something about doing an investment club. He started his first one. He was like 14 years old. It was stocks. And they were investing in stocks, but it was the age old investment club. So I'm like, this is, Warren Buffett's like 90 something years old. So this has been going on, since the beginning of time, so to
Yeah.
speak.
Since the stock market was created.
Was
Yeah.
created, doing investment clubs. So I'm like, I can do that same thing, just not with stocks, but with real estate, where we're just pooling smaller amounts of money to invest in these deals without any one person having to come up with a $50,000 check. And we can do it more consistently as opposed to maybe one deal. Like I said, if you're at a certain income level, $50,000 every single year.
Yeah.
But for most people, that is probably their investment capital for several years. So if we do this at 5 and 10K a pop, if you've got $50,000, you could do 5 to 10 deals at 5 to 10K a pop, and
Yeah.
spread your risk. And the rate of return, a dollar grows at a 15% rate, just like $1 million grows at a 15% rate.
That's
The
exactly
dollar
right.
amount, the little dollar, the currency, the little S with the two lines, is different based on, a dollar goes to $1.15 or a dollar goes to 1.1 million. That's different, but the rate of return is the same no matter if you're investing 5,000 or 50,000 or 500,000. And
Yeah.
so that understanding that and knowing that that's where the Power Pool Fund was born, we just started with friends and family like, hey, we can do these deals if you want to get in on them. You don't need 50 or 80K. You can do it with say 5, 10 or 15K or however much you have and to invest, but at least a minimum of 5K to kind of make it worth the paperwork, make it even worth the wiring,
Yeah.
$15 wiring fee, make it worth something.
Yeah.
We can pool it and do it together because when you think about it, the world is pooled assets. The government pools all your tax dollars to pay
Yes.
for parks and recreations and our deficit and all these kinds of things. The Blackstone and BlackRock and all these things, they're pooling people's, let's say pension fund money, and they're
Yeah.
investing it. It's not just sitting there, they're
That's what a
managing.
mutual fund is, right? They're
Yes.
mutually pooling funds because the stock market's expensive, right? Like most average everyday people prior to the 70s could not buy enough stocks to diversify their portfolio because those individual stocks were expensive. So that's where the mutual fund was created, where you could buy fractional shares of a stock, but you had your portfolio, so you had the diversification without having to buy the full value of each of those stocks. So I mean,
Right.
it's a tale as old as time. Like it's something that people have been doing for a long time. Whether you realize what a mutual fund is or not, that's what it is. But you can recreate that same the cost value and the diversification value can be translated from stocks and bonds to real estate, and that's
Yeah,
what you
or
guys have done.
even banks. Banks are they, whoever you bank with, they're taking all their depositors' money and they're not just sitting on it, holding it for you. They're
Yeah.
lending it out.